Hi, welcome to a special market update. We're going to be looking at the S&P, and let's look at a daily chart to show you some interesting things that are going on in that market. Now here we had a doji, and a doji very often acts as a resistance area, so we could see that indeed unfolded over here. Now the market pushed above the doji and on a closing basis over here, and once it got back under this old resistance area that I'm highlighting with the arrow, that's a falling off the roof. In other words, a failure, how the Japanese refer to a failure on a breakout above resistance. This old resistance really should have held as support. It did here and here, but once it got under this top blue line, the target was the bottom end of the trading range, which was this. The Japanese call a trading range a box range. Now, interestingly, the opposite of the falling off the roof is a crack and snap, where the market had a support area like over here and over here. It cracks under it and then snaps back above it, as it did over here. And this gives us a target to the most recent high, which is up here around 1900. So this is a key support area between the lows over here, and I'd nudge a little bit lower to over here, and pretty much remain in a lateral range between 1900 and about the 1830, 1835 area. Now, on a close above 1900, I would be looking for about another, I would say, 70 points on the upside. Essentially just taking, if I did my math right, about the 70 points from here to here and added to a breakout if the market closes decisively above 1900 for a target to 1970. But now I think we're kind of bounded here. My near-term target is up here, but keep in mind this is critical support now, or short-term support. But even if the market does break under these lows over here, let me give you my longer-term perspective. And we're going to look at a weekly chart and a monthly chart. So here you can see a weekly chart, very much in a bull channel. Interestingly, these lines are actually parallel lines. You see that frequently in either bull moves or bear moves. So parallel lines. We're in a very evident up channel. Now here is a monthly chart, and I've had this on before in prior updates to show you why we're still longer term bullish. I still have a longer term target to about 2300 in the S&P. Let me show you why. We were in a trading range in the monthly chart. The top end of the range was here, and the bottom end was a zone from here to here. Now once the market closed above this resistance area, as mentioned in the daily chart, remember I said old resistance should have been support? Indeed, that did unfold as the market closed above resistance, and notice, it's a little hard to see here, but the low over here held this old resistance area. We call this change of polarity. So this old resistance became a support area. And what I did was took the height. I was conservative here, and I went from here to here rather than from here to here. Took the height of the box range. This is a very common Western technical measurement. Take the height of the box range and add it to the breakout point. So adding, give or take, about 700 points or so, added to about 1600, 1550 in that area, gives a target to the 23, give or take, a few points to the 2300 area. So that's still my longer term target. And just to keep things in perspective, even if the market does break, it really has to break under this level here, down around the 1550 area, for me to change my mind. So from a risk-reward perspective, really not a good long-term investment at this point, because the risk is down here, which is about 300 points, and the target is up here, which is about 300 points. So from an investment perspective, and remember you can use candlesticks, as I do, for retirement planning, not a good risk-reward because of the equal nature. In other words, you're risking 300 to make 300, but still longer-term bullish as we get closer to our target to about 2300. Now, for those familiar with our Candle Charts Academy, you know we do market updates like this on an ongoing basis. But for those who not have yet taken advantage of the free Candle Charts Academy, we invite you to become a student at no cost. You get all these bonuses. It's actually available right now when you join Candle Charts Academy. You get my most important trading rule. You get test your knowledge charts. the 4 common and costly mistakes almost every trader makes. So go to this link here, www.candlechartsacademy.com, register at no cost, and you'll be getting ongoing education.